Industrial Revolution, defined by artificial intelligence, machine learning, robotics, cloud-based architecture, and many other technologies, is redefining business models and disrupting industries and economies around the world. It actually represents a new shift or a different type of impact on globalization. And companies are really having to rethink how business is done across borders, the participants that they're dealing with, as well as the end customer experience in the way their models are evolving. At Citi, with many of the new age or digital native clients that we're working with, what we're finding is as they regionalize or globalize, they have to tackle topics such as regulatory and tax considerations. There are geopolitical issues going on in parts of the world, and trade wars are radically redefining how supply chains are shifting. As a result, these companies have to start with very fundamental building blocks around operating model setups, billing entities, legal entity structures, and how they actually go about doing business in those countries. Secondly, they have to think about how they pay their suppliers, how they collect from their customers, how they manage liquidity in those markets. And third, it's all about setting up the right banking arrangements and the right channels for connectivity with their third parties as well as their banks so that they have a robust model from a treasury management perspective. We also find that these companies are often dealing with risks that they may not have faced in their home market. It could be counterparty risk, it could be supply chain risks. Increasingly, there's a focus on cyber risk concerns. So a lot of time also has to be spent on designing a model that has the right policies, the right framework, and the right technology architecture to support that international model. From a Citi Treasury and Trade Solutions perspective, our vision is to be the financial platform for global commerce. We're looking to support three objectives for our clients: optimization and efficiency, business and sales growth, and enabling them to have a model that supports their end customers' experience. In addition to our significant investments in new technologies, we're also engaged in building strategic partnerships with third parties, including fintechs, to support our clients' growth goals. Combined with our 98-country network and depth of relationships with multinationals like Xiaomi, we're able to build strategic long-term partnerships with many of the clients we work with. We're delighted to have Mr. Chuzhou Zi, Xiaomi's Chief Financial Officer, as part of our Treasury Dialogue series, share his perspectives on Xiaomi's treasury management model, how it's evolved over time, and how they're leveraging supply chain finance to support growth. We are honored to have been part of Xiaomi's treasury internationalization journey and look forward to many more years of partnership.
The best way to describe our business model is that it comprises of three big parts. The first is our hardware business. We are very well known for making smartphones, and today we are the fourth largest smartphone maker in the world. Around the smartphone, we are also an IoT product maker. Today we have the leading consumer IoT platform with many leading smart products such as wearables, laptops, televisions, PC, notebooks, so on and so forth. The second part of our business is our retail business. In our early days, we sold 100% of our products online on our own retail website. Today, a significant portion of our revenue still comes from the retail platforms that we run and operate ourselves. So the second part of our business is retail. The third part of our business is based on the users that we have acquired through selling our smartphones and other devices. We have accumulated a lot of users globally where we provide internet services. And the three parts of our business is what we call our triathlon business model. Xiaomi as a business exists because of our company's mission. Our mission is a very simple one. We want to create amazing products and sell them at honest prices in order to let as many people around the world as possible enjoy the benefits of technology. We believe that technology should be affordable, and affordable technology should be great. This is the basis of our business. The key metric that underpins all this is efficiency. We believe in building the most efficient business model in order to serve as many people around the world as we possibly can. So our entire business model is built around optimizing efficiency. For example, because we own our own retail platform, our ability to attract and acquire customers is a lot lower than if we had to rely on layers and layers and layers of distribution. In order to attract these customers into our retail points, we not only have our smartphone, but we also have a series of what we call IoT ecosystem products. So when users go into our store, either online or offline, they see a full suite, a full portfolio of products. And the underlying business is we are trying to optimize all the efficiency behind it and take this cost savings and return to our users. At the end of 2018, our operating expense as a percentage of our revenue is the lowest in the market across all our peers. Last year, our revenue reached 175 billion RMB, and our adjusted net income reached 8.6 billion RMB. I think it is a verification of the business model itself. So this is a business model that not only has a lot of scale, not only has grown very, very quickly, but it's also a profitable business model. The team ran through some numbers for ROI for the company in 2018. If you include cash, our ROI is somewhere between 15 and 16%. If you exclude the cash, because last year was the year we raised a lot of money through our IPO, our ROI exceeds 30%. So this is a model that is highly efficient, and it's a model that we think has been verified in the market. The company that makes our Xiaomi wristband, Xiaomi, it is a company that's also listed in the US. It is the largest wearables company by shipment in the world today. And this is only one example across many other examples of successes on our incubation platform. So our business model is very innovative. We focus on the few sort of key items that we're going to produce ourselves, and then we use an incubation system to encourage a whole ecosystem of like-minded entrepreneurs to create amazing products and sell them at honest prices to our users. The underlying theme that you may hear again and again from us is this focus on efficiency. Efficiency is about doing the key things in the best fashion possible, and to not do things that are overly cumbersome. But the things that we choose to do, we choose to pursue perfection in the areas that we choose to focus on. So for example, supply chain financing for us is a means to leverage our very efficient capital resources in order to help our partners be able to improve their own efficiency. Because we have very significant scale, we have a very diversified portfolio, our access to capital is much more efficient than a lot of our partners. And this could be ecosystem companies that I talked about that we incubate. This could also be our supply chain partners. So one of the things that we do is we build a very comprehensive set of risk control models, very similar to what the rating companies do. We allow some of our upstream partners and a lot of our downstream ecosystem partners to enjoy the benefits of this very efficient capital. And this allows them to produce products at better prices, which in turn benefits our consumers. So supply chain financing is, it looks like a financing tool for us. But in effect, we believe that this is deeply integrated into what we want to do as a company. This is a very exciting time for our company. In 2018, for example, 40% of our revenue comes from international markets. And this revenue stream at the end of 2018 was growing at north of 100% year on year. We think it is a very exciting time because we are one of the very few Chinese companies that is learning how to be a global consumer company. And in this path of becoming global, I think the key thing that underpins the growth is that we are adding to the value of the societies and the different countries that we're entering. And what do I mean by this? I mean by providing amazing products at honest prices, we are allowing a lot of people around the world to get access to great technology, some for the first time ever. Fundamentally, I think one of the key things that we have learned as a Treasury team is that we need to understand what are the key drivers that drive each key country's economy, and what are the key factors that influence its currency. We believe that the first step is of course to purchase whatever instruments you can buy in the market, but the long-term solution is to truly understand what drives the fundamentals of each economy. And this is the best way for us to mitigate our risks in the long run, in order for us to come up with long-term solutions for each country that we enter. Today, we are operating most of our treasury operations, most of it here at headquarters in Beijing. Because of currency restrictions of different currencies around the world, the next step is to choose a global currency treasury center where we are able to build our capabilities to handle the varying requests in a more efficient manner. In the long run, though, the difficulty is the balance between what functions can be a shared service that can be dealt with in the global treasury center and what services need to be more on the ground. Now, if we go across the world, there are different time zones, sort of very localized expertise that we need to acquire. So I think in the long run, there needs to be a combination of certain shared services that can be performed in large global treasury centers and a lot of localized expertise that still remains in the hands of our regional or even local sort of treasury teams. And the difficulty is to manage the information flow, is to build a comprehensive system and process in place, and to make sure that the roles and responsibilities are very clearly spelled out.